Welcome to Shadow of Truth with your hosts Dave Kranzler and Rory Hall. And today is Wednesday, September the 16th, 2015. And this is just a quick market update. And I wanted to bring a video to your attention that was created by John Titus of Best Evidence. And in order to fully understand what Dave and I are going to dive into, please watch this video. It's only about 10 minutes long, and I can assure you that it will change your full perception of what is happening in our world today. Thanks for tuning in, and we greatly appreciate everybody being here. And Dave wanted to bring to everyone's attention an article that was on Bloomberg that was published back on September the 11th. And the title of the article is Fund Investors May Pay Fees for Withdrawals Amid Turmoil. Sounds pretty ominous to me, Dave.
Indeed it is. I was kind of a little bit shocked when I saw this article, although I shouldn't have been shocked because about 2 years ago I did a podcast with John Titus of Best Evidence. We had a little mini-series that we were publishing, and at the time the SEC passed regulation which permitted money market funds to gate their funds, put exit gates on them during times of market volatility. And this tells you that they knew at some point the stock market was going to reverse course. And I had suggested at the time that it was one step in the move towards capital controls and to keep and an attempt to keep people's money in these mutual funds regardless of what the market's doing. You know, so much for free choice. And it's an example of where they change the rules of the game in the middle of the game when the game doesn't suit, when the game isn't going the way they want it to go. So now there's a new regulation or rule change being considered. And when I say it's being considered, it's sponsored by BlackRock, and BlackRock has been pushing for this for quite some time. So it means it's going to happen. It's just a question of dotting I's and crossing T's. But what they're going to do is they're going to allow mutual funds to impose an extra charge on investors who want to sell their mutual fund during periods of high volatility. And by high volatility, what they mean is when the market is going down quite a bit like it did a few weeks ago. Now, the justification for this is that, oh, well, there's extra trading costs incurred. Well, anyone who wants to sell when the market's going down, even if the trading costs are higher, they shouldn't be penalized for that because trading costs come out of the operating costs of a mutual fund, and everyone knows that going into it when they go into a mutual fund. It's a cost of doing business. This is essentially a back-end loaded fee that they're putting on there, and in some ways it's almost like an exit gate because to the extent there's a lot of people out there, and you and I know who they are, they're going to refuse to want to pay these fees even though the market's going down and their investment's going down. They don't want to pay the extra few pennies to get out of the fund. They'll wait until it comes back a little bit. That's sort of the adage.
Yeah.
But that's not the spirit and intent of what this rule change is. This rule change is going to attempt to steer people into staying in these mutual funds when the stock market is spiraling out of control to the downside. And what I find most interesting about this is on many days over the last 6 years, the stock market has spiraled out of control to the upside, and yet there didn't seem to be these extra trading costs to new retail investors pushing their money at these mutual funds hand over fist when the market was going up. Not a problem there, huh? Nothing to see.
No, nothing to see. It's because that would keep people out of the market, and the whole intent is to keep people locked in.
That's exactly right. And so my message here is that, just like I said a couple years ago when they allowed money market funds to put exit gates on money market funds, during periods of quote unquote high volatility so that you couldn't get your money out when you wanted to, is that this is going to enshroud the entire industry. So it's not just going to be money market funds that ultimately have exit gates on them. This is a subtle exit gate. The next time around, it's going to be a stronger exit gate because there will probably be enough people who still want to get out of these funds, which they should because the market's insanely overvalued. But unless you want your money to be trapped inside mutual funds when the market really starts to engage in true price seeking, price discovery seeking, then I would suggest that you get your money out of these mutual funds now. And the relevant point here is that we know the stock market and the bond market are both insanely overvalued. So to the extent that you've had your money in these funds for the last 5 or 6 years, you've made 90, 95% of what you're going to make on these things. You have nothing but downside here. So there's actually no reason to keep your money in these funds. None whatsoever.
Yeah,
Zero.
lots of downside risk and very little upside reward to be garnered here. And I wanted to circle back on something that you just said there, Dave, and bring into the fold who these people are. I want to go back to Cyprus and the fact that Jeremy Stein, Fed head out of Dallas, I believe, did that presentation to the group of criminals at the IMF, explained to them that Cyprus was the go forward model. We are going to trap their money, then we're going to steal it, and this is not just a way of keeping you in the market. This is a way to set it up to where your money gets stolen. Period. And the reason I say that is because the last year, and I'm going to read this. This is directly from the article. Last year, SEC Chair Mary Jo White announced plans to propose new rules to address worries that existing safeguards weren't designed for funds that are increasingly investing in securities such as junk bonds and bank loans and using derivatives to boost returns. So they don't want you to get your money out of these derivatives because they know that these derivatives are going to blow the system up. And then the article goes on to say, this is a direct quote, and this is really the crux of what I want to bring to people's attention. Direct quote from Robert Plaz. He is a partner at Strouk, and Levan, and they are a criminal law firm out of New York, and they may represent BlackRock, but I haven't been able to find that to be 100%. But this is a direct quote from him. This is trying to impose some countervailing pressure on redemptions during periods of instability, end quote. I didn't really understand countervailing, Dave, so I went and looked it up, and I'm going to read that definition of countervail. Offset the effect of something by countering it with something of equal force. Now, does that mean that this criminal lawyer is proposing that if $10 million is taken out of the market, that somehow they're going to countervail that with $10 million worth of fees? What is he trying to say? I think that that's an important part of what these criminals are trying to set up, because that's a direct quote from the scumbag that's helping. And this guy is a previous senior regulator of mutual funds at the SEC. So he wrote the rules, and now he knows how to get around them and to countervail those rules, which is exactly what he's trying to do. Or am I just way off base here with all of that?
No, you're 100% accurate there. In fact, I hadn't really focused on that quote too much, but it's actually a little bit frightening, trying to impose some countervailing pressure on redemptions, which essentially means, in so many words, it's a subtle way of saying capital controls are coming.
Well, I mean, but the word countervail is important. It's an important word that he's using there, because that means to offset with equal force. Okay, that is a huge part. What is he going to write into this rule? with with the assistance of Mary Jo White and his buddies over at BlackRock, who he represents probably. I mean, it's
I'm sure
ridiculous.
he does. Yeah.
Well, I'm sure he does too, because it's a pretty large firm, from what I could tell. And I mean, the fact that he is a former senior regulator of mutual funds at the SEC. I mean, this guy is the absolute epitome of backdoor uh, room, backroom deals being made. I mean, he was in government, now he's not in government, and guess who he's representing? The people that are supposed to be on our side when they are in fact are not. They're going to steal all your money if you leave it in there. Period. Every dime you leave in a mutual fund will disappear. It no longer belongs to you, and if you don't get it out now, pay your taxes, pay your fees, and get it out, I guarantee you're going to lose a hell of a lot more than what those fees and taxes are today.
Yes, I agree 100%, and I think it's a matter of being, leaving your money in a mutual fund right now is a matter of being penny wise but pound foolish.
I mean, it bothers me a lot because I've actually discussed this with my wife and tried to explain that one sentence to her, and that's why I was so focused on what this guy is saying. I mean, this Robert Plaz, just like Jeremy Stein, 3 years ago, came out and said, "We're going to steal all your money." He said that. He didn't say it exactly like I just did, but the gist of it is that we're going to steal your money. Robert Plaz, in my opinion, by using the word countervail, is saying we're going to steal your money. We're going to call it fees, but we're going to steal every bit of it. You're not going to have anything left.
That's right. And what's interesting here is the real hidden mechanism here is that a lot of this is in response to, as you mentioned, junk bonds, riskier investment categories, and derivatives. Now, these people were all too happy to take your investors' money when they were funding these investments and letting the people who were taking that money that the investments represented and doing what they want, paying themselves a lot of money. A lot of these junk bonds that were issued were used to fund dividends for private equity companies, private equity firms, and also for big corporations, and also for stock buyback. So it was basically a mechanism of direct transfer from the investor to corporate America is essentially what it is, and business America, and that was it. And now that these investments are starting to fall apart, they don't want you to get any of your money out because they know at a point there's going to be no bid for these investments.
Well, when you're talking about, I mean, listen to these two words: junk bonds. I mean,
yeah, that's right in my wheelhouse. I traded those things for 9 years. I know that market inside and out. And believe me, it is sleazy and corrupt, and it's way worse now than it was when I was doing it in the 90s.
all you have to do is listen to those two words: junk bonds. I'm sorry, it just cracks me up
It's
how
a politically
anybody.
incorrect term, Rory. They're known as high yield bonds.
Yeah, they yield a lot of income for scumbags like Robert Plaz and his ilk.
Exactly. I actually worked with a bunch of ex-Drexel people, and Michael Milken loathed the term junk bonds. He hated it, and you were forbidden to use it in his presence.
Because the truth hurts.
Exactly.
Oh my God. Well, we're not trying to scare anybody. I just want everybody to understand that this is not about fear, gloom, and doom. This is about reality. These guys are working deals in the back room. You can go and read this article, and you can read their own words. You can look up, Stroke, and Levan, and see and find out about this Robert Plaz guy. If you don't know about BlackRock, you need to find out about them because they are dirt bags. They are thieves. Period. Mary Jo White is not on your side. She is not. She is the chair or whatever her position is with the Securities Exchange Commission. If she had any sort of backbone or authority or anything to do with protecting you, there would be people going to jail right now, they would be in prison. Some people would be in front of a firing squad for committing treason, but they're not. So Mary Jo White does not have your best interest at heart. Robert Plass, he could care less about you. BlackRock, they just want all your money. And if you've got it invested in the mutual funds and 401ks, IRAs, private pensions, then you more than likely are touching BlackRock in some way or another.
Yeah, I meant to say Mary Jo White is the head of the SEC, and prior to that being appointed to that position by Obama, she worked for, and I forget which big sleazy New York law firm, but her whole practice was focused on keeping Wall Street investment banks protected from the SEC. And now she is the SEC. So she's nothing but a big Trojan horse at the SEC. So this rule is going to come. People who leave their money in these mutual funds are going to be sorry when they want to take it out on the next down leg and they find they're going to be charged extra money to do so. And this is just another step towards actual hardcore capital controls on these things, because at some point they're going to say, we need to keep people from selling their mutual funds because it's causing the market to go down. as if it has nothing to do with the fact that these stocks are the most insanely overvalued in history.
Yeah, and regardless of and irrespective of the fact that 75% of the trading is done by machines, the high frequency trading mechanism that these guys all own. So it's not because of mom and pop out there doing it. It's because their HFT algos are going crazy.
That's exactly right.
So, well, is there anything else?
That's all I've got.
Well, all righty then. I guess we will talk with you soon there, Mr. Dave.
Sounds good. Hope everyone has a good rest of the week.